Let's get to our wrap the week segment. We're going to start with a poll question. We have a poll running pretty much at all times on our live stream page. If you go to the StockCharts website, click on StockCharts TV at the top to watch our live stream. We'll have a poll there running just on the right side of the screen. We also send them out on social media as well. And recently we asked you, how important is sentiment? Things like the AAII survey, the name exposure index, and others. How important is sentiment in your process? Very important, somewhat important, not very important, or I literally never look at those things. I'm concerned about the 22% that never look at them. And the reason is because I've tended to think of macro analysis in three parts: price, breadth, and sentiment, in that priority order. Price is most important. What is happening, the market and the message of the market itself. Breadth tells you a little more. It's sort of like peeking under the hood behind the price, right, or underneath the price. What's actually driving the performance of these indexes or the ETFs that you're looking at. That's why breadth is so important. Sentiment is a third very crucial piece because it talks about contrary opinion. And if you haven't read about contrary opinion, dig up Humphrey Neal's book on, I think it's The Art of Contrary Opinion, if I remember right, or The Art of Contrary Investing, something like that. But look for Humphrey Neal and Contrary and you'll find this book. But he talks a lot about keeping a media notebook and looking at headlines and looking at newspapers and magazines. And obviously now we have so much more opportunity to identify contrary opinion. When are investors too bullish or too bearish? Most of you put it in the somewhat important or a very important range, and I think that's a pretty good spot to be. I think that's where I would definitely put my vote in. Somewhat important. It's not the most important, and if I had one thing to look at, it would not be a sentiment indicator. But I have found them to be really helpful, and I'll tell you where it's most helpful is helping you understand what charts you should look at. When you see sentiment spike, it makes you think, all right, what stocks are actually moving? What's causing this appreciation? What are investors trying to do? And what thesis are they trying to express in their holdings? And so that's why I would encourage you to check out some of the sentiment data that we have on stockcharts.com. Continuing on with our Wrap the Week segment, here's how we normally do it. We'll just briefly talk about the markets today and talk about how Friday played out. We'll quickly go through the Wrap the Week chart that we review, which looks at an asset allocation performance chart over the last 5 trading days. And then we'll finish off looking at the Mindful Investor live chart list, look for some key themes in price, breadth, and sentiment. Let's get to it. So today, certainly distribution mode. You had negative earnings yesterday with Amazon after the close. As we were recording this show, you saw the beginning of the distributions there, giving a little more chance to read up on the earnings report and look at the reaction. Certainly following through to the downside. Amazon back below its 50-day moving average. Big mega cap name like that, like Apple, like others that instead of breaking out of their bases and continuing, they've broken out of bases and now coming right back down to earth, which for me, it feels anecdotally very much like an exhaustion gap, right? Sort of like that last big gasp to the upside before something happens. Having said that, as long as the market continues higher, the market continues higher. Today was down 0.5%. We'd have to go a lot more further down before we reach the 50-day moving average. Currently around 3 to 3.5%, I think, below current levels, if I remember right, probably 3.5% below where we're at. So that's not too far away. That's a couple down days away, but it's certainly the line in the sand so far year to date. Mid caps and small caps down just a little bit. They were up earlier in the day, but finished in the red, and the VIXs are just above 18 now. Interest rates actually weakening today, coming off as bond prices bouncing higher. The TLT was up about 0.5%, and the dollar index, which has been coming off recently, bouncing a little bit higher, about 0.25% to the upside. Gold really spent most of the day in a downtrend. It bounced a little bit in the last hour, but most of that was negative, with gold down about 0.8% by the end of the day. Mixed results from the rest, although net negative for commodities. Energy, oil prices up a little bit, but energy stocks got beaten down. You had Exxon and Chevron both reporting earnings before the open today, both finishing in the red. Cryptocurrencies continue to be quite volatile. They're spiking here as we're recording the show, but I think for Bitcoin, you're looking at that 40,000 level, which has been a bit of a magnet price for the crypto for the last couple days here for much of this week. So I'd certainly pay attention to see what happens over the weekend if it's able to get above 40,000 and remain there. In terms of sectors, very quickly, you had materials number 1 and real estate number 2. Pretty much everything else was flat to down, and the biggest weights consumer discretionary down 2+%, energy, utilities. So certainly a defensive feel to the top of the list. Besides materials, it's REITs, consumer staples, and then healthcare and technology in the middle there. You get some things that are sort of a mix, but probably thought of more as offense than defense. Let's look at the weekly wrap chart. That's this one right here. That is not it. Here we go. Let's refresh the chart here for the close. We're starting the clock last Friday at the close and just looking at the movements of each of these asset classes using ETFs, and I'll walk through them very quickly and identify each of these lines. The S&P 500 is here right in the middle in black, down 1/3% for the week. Underperforming stocks for this week, we have the dollar index using the UUP down 0.8%. Down 1% was the NASDAQ 100. We're using the Qs for that. And then in orange, this is emerging markets down 1.7%. Boy, EM has really been pretty weak. And this week in particular certainly saw further distribution relative to developed markets. What outperformed US stocks and overall finished the week in the positive, you have a cluster of things right here, right around 0.7 to 0.8%. In red, we have the TLT, that's bond prices. In purple, we have small cap stocks. And then this is gold here in the very appropriate gold color. The strongest of the bunch up here at the top is crude oil prices using the USO, which was up 2.4%. Now, when we add Bitcoin to the mix, you can see Bitcoin was actually the big gainer of the week, up 18.6% for the week. So, cryptos as usual skew the distribution of most things. I'm actually going on a podcast next week, I think on Tuesday or Wednesday, to talk in particular about cryptocurrencies and some of the technical considerations, behavioral considerations, and how to approach trading cryptocurrencies. And one of the things we'll talk about is just the elevated volatility, the pure speculation that I would argue is running rampant. That's not by definition a bad thing. It's just certainly something to be aware of when people are not necessarily grounded in fundamental data and long-term investing, planning to retire on Bitcoin necessarily, but it's more it's more speculation. It's more, it can be more quicker money and more, certainly more volatile. And the evidence has absolutely supported that. So Bitcoin up the most out of all the ETFs that we addressed this week. Let's go to the Mindful Investor live chart list. This is the chart list that I maintain at all times on StockCharts. At all times is probably not correct. Maybe about once a week, I'll make sure that this is updated really in preparation for this show. I'll make sure all the charts are updated, but this is a list of charts. This is a great process if you just want to get a sense of price, breadth, sentiment, and then a bunch of key ratios, which helps you understand the relationships between different themes and groups and asset classes and styles. I would recommend taking a look at this list with some regularity. To get to this, by the way, if you've never looked at it before, go to your dashboard. Actually, that's not true. Go to the articles page, which is where we have all of our blogs. Mine is called The Mindful Investor, which is this one here. There's this gray button right at the top that says live chart list. That'll get you to this page, which we will review together now. First one is the market trend model. This is a weekly model that we update every Friday at the close. It's a way to track medium-term, long-term, and short-term trends and just have a model running in the background. I do very little on an automated basis, although I do some things based on a momentum model, but most of my stuff, the model is not an output of the process, but it's more an input of the process, into the process. I like having something like this running just to have a systematic way of determining what are the three trends on the timeframes that I'm interested in, and use that to compare it to what I'm seeing on the charts. Because a lot of times this will help keep me in things I would normally maybe get nervous about, or help me to remain cautious when I might get excited based on what I'm seeing on individual charts. What is the model telling us? So it's the long-term model, which is really a secular trend, has been positive since June of 2020. Nothing is going to change on that model until we get quite a bit of distribution. It's been positive and remains so, which is absolutely fair given the strength in the long-term trend. The medium-term trend model for me, which is literally based on the weekly PPO, turned negative in mid-May and has remained negative. And even with the S&P going to new highs June into July, it's come really, really close. And you can see on the histogram, it's just a hair below zero, but it just keeps not going positive. And what that's told me, and what I've encouraged my clients how to think about it, is just it tells me to remain cautious. For me, the medium-term model is not a systematic risk on, risk off. It's more telling me whether to think more about potential reward or potential risk. And when it's on a sell signal, it tells me to be thinking more about the risk side of things, to make sure that stops are updated, to make sure you have clear lines in the sand to define downside risk and protect from climactic capital loss, which I think is one of the best things you can do as a long-term investor. So it has remained negative. It remains negative on the close today. So overall, telling me to remain cautious. And arguably, I would say that the market has been in a correction mode since April. It's just been a stealth correction. It's not an obvious price correction. It's more a stealth correction. I can show you plenty of charts that have really deteriorated since April to May. And I think that's the real story here right now. Short-term model remains positive, and that's simply looking at where we're at relative to the 5-week exponential moving average. The daily chart of the S&P, we actually had a question on this, which I'll save for our mailbag segment after the break. But overall, here's what I'm seeing. I think the S&P chart is easy, if a chart ever is easy, only because the 50-day moving average has kept you in this long trade, especially year to date. That has been the game. Buy when it pulls back to the 50-day, it continues to revert higher. I'm going to assume that pattern continues. The 50-day moving average, if we would distribute next week, is right 3.5%-ish below where we're at. We go a little bit further than that, 4.5 to 5%, I think puts us down at the June low. So overall, I think we pull back to those levels. That would be the garden variety pullback that we've seen in the markets so far year to date. I think when something more than that happens, that's when things could really get interesting, because that's when you really have to start thinking about downside protection and hedging and taking bets off and raising cash. At this point, it's more tactical moves within an uptrend that persists, higher highs, higher lows. As long as the highs and the lows keep getting higher, we're in an uptrend, which means I would be eyeing the 50-day. I'd be eyeing this low from mid-July. The bearish divergence is very, very telling. Very quickly, just to update on some other things, I think breadth remains fairly negative. If you look at the cumulative advanced decline lines, even with the strength we had midweek this week, still overall remaining positive. They're in a downtrend, which tells you that the trends are deteriorating. One of my guests this week, and I forget who it was, and I apologize for that, but I think it was on Wednesday's show, someone actually highlighted the increase in new lows, and I think that was a really good way to do it. I have the new lows very, very low only because the new highs are skewing it. But if you look, there have been a handful of stocks on the New York Stock Exchange making new 52-week lows. And this week, it's been more like a couple handfuls. And the more that increases, that tells you that plenty of stocks are actually breaking down in a pretty big way to get down to, a new 52-week low. For a lot of stocks, that's a far way off, but certain names are actually getting down to it. Final thing I would say is that less than 60% of S&P members above their 50-day moving average. It's not yet updated for today. So I'd keep an eye on it going into later this evening into the weekend. But overall, I would say breadth conditions are more in correction mode than uptrend mode. The only thing that's not correcting is the price of the major indexes. And I know I'm saying that with a little bit of sarcasm. Overall, if you're an allocator, I don't disagree with allocating to stocks in a big way, given the trends and given the persistence of those trends. I do have a problem with blindly buying stocks at this point, because I think not everything is in good shape. And I think it's a good time to be a stock picker if there ever is a good time to do so. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.